of a reaction there?
We did see a reaction in terms of the Aussie dollar, and I guess if we have a look at this mid-year budget announcement, what was a surprise to market was some of the spending cuts coming through. The government is the biggest spender in the economy, and when it pulls back on spending, it's expected to put pressure on the economy. So we did see the growth rates being revised back this year. It's 3.25%, next year 3.25%, and that's in line with the market. But altogether, we saw a response in the Aussie dollar and expectations that perhaps this is going to add to the case for a rate cut. If we have a look at the Aussie dollar, this is how it traded during the day, and you can see the downward movement that we saw in the Aussie dollar before a late rise afterwards. And I guess this echoes Michael's comment in that the domestic factors really are just a blip on the radar at the moment, and the main consideration are the developments coming out of Europe. So although we did see an impact in terms of the Aussie dollar, and it was an extremely volatile trading day for the Aussie, it is still being driven mostly by offshore developments, and we saw in the afternoon the market really just ignoring those budget developments.
Kieran, I might get your thoughts. The appetite is there to keep the market above 4,000. It seems every time we do dip somewhere with a 3 in front of it, it doesn't stay there very long.
No news out of Europe is likely to keep the market above 4,000. More bad news out of Europe is likely to see the Australian market probably dip below that 4,000 point mark. And we saw an incredible performance by offshore markets overnight. I mean, if we have a look at the S&P 500, up by almost 3%. And if we have a look at the French CAC, it was up by a massive 5.5% in one single session. And that really does signal that there had been a lot of shorts in the market. And what we've seen now is this massive short covering rally. Not surprising, given last week we saw 5 consecutive days of declines. Every single session that week was a down one, and today the market up by 1.1%. But I think the concerning part of the performance today is that the best performance were in the defensive areas. Usually when you see the market performing well, it's driven by the growth areas, the risk-on sectors of the market. But today, if we have a look at the best performers, came out of things like the healthcare sector, the telecom sector, the utility sectors, which gained more than 1%. And the best performing sector was property, which is acting like a defensive sector because of the high yields. Property has a distribution yield of 7.2% at the moment compared to the Australian market, which is at 5.4%. So still, we saw very defensive positioning despite the gains we saw in the market. Not only that, we didn't really see the follow-through come through from other risk assets. Oil prices were down overnight. We saw commodities really looking quite shaky in Asia. In fact, copper prices down for most of the session. So while we did see a strong performance by the Australian market, we finished on a high. Some of the worrying signals are coming from the type of sectors which are outperforming, as well as other assets really not showing much of a follow-through.
Michael McCall says.
We did see Extract in our focus, and it does look like they're looking at a sale of 10% of their Husab project. And if we have a look at this Husab project, it is a very attractive resource. It's believed to be the 4th largest uranium-only deposit in the world. And of course, there's been quite a bit of takeover activity surrounding this stock as well. In fact, we've seen Guangdong also in talks to sell a 10% stake of Husab, and that's because Guangdong is hoping for a takeover of Kalahari Resources, which is a major shareholder of Extract Resources, holding 42.7%. So it does look like Guangdong still having ambitions in terms of trying to get control of Extract Resources. Of course, that is going to be dependent on the takeover of Kalahari and then a possible takeover of Extract Resources. But of course, all this takeover speculation and activity has been great news for Extract's share price over the past year, despite the falls that we've seen in uranium prices and also concern over uranium oxide demand.
Now, I've got you all here. I just wanted to quickly focus on the banking